Today, I have the pleasure of doing this week's Critical Minerals Report because there is so much going on in the news. I'm not really sure where to start. But, Jack, before we started recording this morning, we were talking about the UK Telegraph and a column that you've written to counter what they had to say this morning. How about we start there?
What the Telegraph wrote about this morning was the sharp decline of Volkswagen, Germany's premier automotive manufacturing company. And in fact, on any given day, it was the world's largest automotive maker with 10 million units a year. It was trading that place back and forth with Japan's Toyota. Lately, that has not been the case. The issue that I thought of when I read this article, and the reason I wrote mine, was that if the United States should allow the free import without tariffs and restrictions of Chinese automobiles, both internal combustion type and electric, in my opinion, that would be the end of the domestic American automotive industry, because on price alone, the Chinese would take the market. And they're already doing this in Germany in a sense, because the Germans were depending on a huge sales of their products in China, which have sharply declined. Now, the point of all this for critical minerals is that if the Japanese and I'm sorry, I meant the Chinese. In any case, what's happening here is that this affects very much the demand for critical minerals in the West, outside of China. Because if we're going to buy manufactured goods from China of this type, then they will be the ones utilizing the critical minerals, not us. And the point I'm trying to make is that, in my opinion, all of these demand predictions in the West for critical minerals, for batteries, for electric motors, things like that, are vastly overstated, because we don't know yet where that demand regionally and geographically is going to be. And at the moment, it very much is favoring China domestically. We have made enormous investments based on these fantasy, in my opinion, demands. And these are chickens that are now going to come home to roost economically. And I think we have to take a hard look at this.
Mel, this week's Critical Minerals Report is going to start out with China's controls are no longer merely threatening supply chains. They are raising costs, strengthening Chinese manufacturers, and dividing Western allies. So this week's headlines were all about China's controls threaten $6.5 trillion of production. So would you like to start with your comments on this headline, please?
Yes, I absolutely would. Because, yes, China is a dominant force. China is not the only country on the face of the planet. And there are so many diverse strands of demand, not all of which are yet under China's control, that while tightening their own export controls obviously creates an immediate ripple effect, and even through the midterm. And I agree with Jack. A lot of the companies that are currently striving to get into production are never going to make it into production because of variable demand, and also because maybe they're just not as good at building mines or factors such as that. But what I would point to is there's a real shockwave coming. They're tightening controls periodically now. But as I think Jack has written about recently, the cliff is coming on November 10th. And this current tightening of controls, which, by the way, includes a crackdown on smuggling. The Chinese government for many decades has tolerated and in some cases encouraged a flourishing gray market smuggling industry. They're cracking down on that now for rare earths. So they are slowly but surely gathering all the threads together. And it does pose a threat. I'm not sure it's a completely devastating threat, but it's a threat.
Mel, you're so good at coming and coining new terms. I love the November 10th cliff. Okay, Jack, you wrote a column about this week, and there's people out there going, November 10th, November 10th, what does this mean? How about you start by explaining to our audience more about November 10th? And of course, we'll point everybody's attention to the column you wrote about it on Thursday.
November 10th is the date that China's temporary relaxation of its export controls on critical minerals and technologies expires. And we do not expect here in the West that China will say, well, we'll just extend that. We think they're going to announce that, in fact, more export controls. And we talk a lot about minerals and things like that, but we really need to start talking about technology. The unfortunate attitude in the West is that everything was invented here. Well, that might even be true in most high tech, but that doesn't mean everything is going to be made here. Okay. And what's happening is that people are focusing on the critical minerals export restrictions, which will the temporary lifting of that will be expiring November 10th, and we don't know what the restrictions are going to be at that point. But I'll tell you what we do know. The export of technologies for processing critical minerals is not temporary. That's been enforced for some time, and it's become extremely well enforced in the last year. And Mel pointed out something that I think people have to understand. This is nothing new. China's been looking at this for a long time, and I have to say, my opinion is that this is where China has outsmarted us. They know very well that it's technology for processing that we need, and they will not help us anymore. I want to point out to everyone just one thing you have to think about. Every company in the West that says we're going to make magnets is planning to buy manufacturing equipment from China. That has not been possible for more than a year. One of our companies here successfully built a magnet manufacturing plant in Europe last year. They will not be able to duplicate that because they can't get the equipment. It's going to have to be designed and built here. That's going to take time to design, to build, to burn in until it reaches commercial capability. This normally takes years. I don't know what people are talking about. They're going to be in production next year. We don't even have the machinery.
Mel, do you want to add anything to that?
Yeah, I think it's a very crucial point. There are, at least in the magnet space, I think there are some workarounds. Companies are looking for joint ventures with existing magnet makers. The US government is trying to entice, particularly the Japanese, to really invest in that space in the United States and in partnership with US companies. But the point about the technology is one that really irks me, and I'll tell you why. And I've said it before, so I hope I'm not boring people, but we are not going to beat China by replicating China. We're going to beat China by doing things differently and hopefully better. I think that there's an urgent need to really accelerate some of the alternative processing methodologies that have been being explored by companies and by the national labs of the United States, by the Department of Energy, even by the Department of War, because that is how we're going to regain the competitive edge against China, particularly in that processing link in the supply chain.
Okay, we're now moving to what I deem to be the most fun part of the Critical Minerals Report podcast, and we're going to go through the top 10 stories for the last 2 weeks. Who would like to go first today?
I yield the floor to Jack and his pork pie hat.
Okay, Jack, we're going to start with you. 60-second answers, please. 60 to 90-second answers. Let's start, Jack. Rare earth costs surge over 20% for Japanese firms. Comments on this, please.
I think we have to understand that we're not going to be able to control pricing. of goods that are made overseas. This has been a issue since World War II. The idea that maybe we can have international prices for commodities and for manufacturing. It is not going to happen. I can't tell you what prices are going to be in the future, except they're going to be higher for everything.
Yeah, I think that this particular segment is especially interesting in that regard because the mining industry, and particularly the largest mining companies, have gotten used to the luxury of going to London once a year and setting the prices for major commodities. And that, of course, has provided great stability and has also in some ways limited development around those commodities. So the price flexibility in the rare earth space is both a detriment and potentially a help. I certainly expect it's encouraging Japan to further accelerate its deep sea mining endeavors.
A headline that I thought was utterly ridiculous. I started to read the column, but I really didn't want to read any further after the first several paragraphs in the Wall Street Journal's story called "The U.S. is Trampling Allies in the Global Hunt for Rare Earths." Basically, the gist of this column, if either of you missed it, is that American deep pockets are pushing Europeans out of their quest for securing these critical minerals. Mel, would you like to start with this one?
It's actually more real, perhaps, than we might think. I remember a couple of months back, I was talking with some officials from the European Union, and the subject of money came up. And the person with whom I was speaking said, "Oh, yeah, absolutely. We know we can't compete with the US. You're going to outbid us on all the best products. We know that. So we are trying to develop our competitive advantage. We are going to try to be specializing in very narrow spaces along the supply chain. And we're going to leave it to the US to run out and buy all the resources that it wants to buy because we can't compete with them." So it interested me then, and it interested me now because the current approach of the administration is modifying. At first, it was very much America lone wolf, go it alone. Well, we just saw a very productive G7 meeting. So maybe there's still the hope that other nations will be able to partner in the financial world with the U.S. to gather the necessary resources for survival.
I agree and I disagree. I think Europe has a huge problem, and I think their problem is they're not going to be an exporting area. They have to determine what it's going to take to maintain their gross domestic product without export, because they can't compete financially. And we've all lived in an age of a Eurocentric age until fairly recently, and it's hard to accept this, but Europe is fading very rapidly from the global trade system. This is its biggest problem. We have a lot of money in the United States. I think we produce 20 or 25% of the world's GDP. We're the biggest consumer market in the world. Unfortunately for us, we're not leading in brain power anymore. We don't want to accept that. And so this is the big problem. The Europeans, in my opinion, are done. And we are going to hold our own. But if we don't remain an exporting nation at the levels we've been doing, we've got a big problem also. You cannot subsidize your way out of this.
Well, I'd like to thank you both for coming up with our next masterclass title, which I'm going to title The American Trump Card. Now for the next headline. Jack Linus's Pentagon rare earth supply deal draws Malaysia scrutiny. Okay, and we've been talking. I don't think many people, a lot of people just haven't had the opportunity to travel to Malaysia, so they're not aware of how competitive Malaysia is technologically. Okay, that's the point I'm trying to stumble out here to make. So, Jack, can you run with this, please? Because I'd love your comments on this.
Malaysia is a high-tech industrial nation. It's little known in the United States, that's for certain. But it has implemented a plan for a domestically sited total rare earth enabled product, mainly magnets and motors industry. And the way it's implementing that is the way many nations have done it. They say that you can only export from our country the highest value added product in the supply chain. Okay, so they have begun mining rare earths in Malaysia. I want to point out to people that Lynas is a foreign company processing in Malaysia. It imports its ore body from Australia. So it doesn't qualify as a domestic Malaysian company. It has no Malaysian ownership. Now, they've started mining. They're building, that I know of, 2 separation plants. They're looking at metal making technology, and they already have a magnet maker, a foreign magnet maker operating there. And their Lynas is, in fact, has made a deal with a Korean magnet maker to build a plant in Malaysia. As they move up the supply chain, that restricts what can be exported and also to whom it could be exported. Just let me say one thing that everybody has to think about. Malaysia is a Muslim majority nation. It does not agree with American foreign policy in the Middle East. This is creating a problem for licensing of the export of any Malaysian company to the United States. Everybody keep that in mind.
Yeah, that's a really great point, Jack. The echoes of the current conflict between the U.S. and Iran are only beginning to be heard. And this is a great example of what could potentially be developing as a lot of those nations shift their stance. They had been coming closer to the U.S., and we've now given them every reason to change that policy.
Mel, in your foreign service days, you were based in Russia and you were also based in Ottawa. Is that correct?
Yes.
So I'm going to give you the next headline. Canada bets $400 million on BC critical minerals. Highly relevant from the tech investment covers germanium, gallium, and antimony production with government offtake rights. Any thoughts on this, please?
I think it's an exceptionally intelligent move, even in a socially complicated context. I mean, obviously, in terms of the social acceptance of mining within different provinces in Canada, BC is not exactly the number one fan of the industry. However, we've seen some instances where they've been willing to modify that stance in the critical mineral space. So I think it's absolutely intelligent. Canada knows what the U.S. is refusing to admit. The defense industry is about to get into a very serious problem. There have been some preliminary articles in the United States pointing out that, companies such as Raytheon and Boeing are beginning to panic. They probably should have begun panicking about 6 years ago, but they're now beginning to panic. And they're going to have to source these materials someplace. And certainly, Canada offers a short, secure, and a trusted ally source of these materials. So yeah, very smart move.
What I've seen in the American defense industry is that they keep hiring people from Washington but the point is, these people in Washington can help them to win and hold contracts, but not to source anything. And yet, the people in charge of sourcing critical materials at the defense companies are typically Washingtonians. And I don't think they know very much about sourcing critical materials. And I think that the American military-industrial complex, as President Eisenhower defined it, is way out of sync with their procurement needs. And I agree with Mel 100%. Canada is the obvious choice for these critical materials. I just don't know if Washington has the will to do it.
Speaking of Washington, Financial Times had a headline this week, which I thought was intriguing. Rare earths from Trump-backed U.S. mines sold to Asia. Jack, you obviously have to start with commenting on this one first.
Well, the point is, it's very simple. I guess I joke a lot, but When I heard about the immense production at, for example, one of our companies of the light rare earths, I said, well, what are they going to do with that? Because there's nobody to take it. Okay, nobody in the United States is tolling separation. Nobody in the United States is making commercial metals or alloys, and the magnet makers we have here are such a tiny proportion of the world's magnet makers, or even what we need, that it's trivial. So I suggested, because the colors of the individual rare earths oxides produced at that company in the West are quite attractive. Neodymium oxide is pale purple, for example. You make nice face brick, or perhaps ceramics, but it won't make magnets because we don't have the capability and capacity here. So where are you going to sell it? What this is telling you is very simple economics. The market is over there, so that's where you sell it. And I have to say one more thing. You keep subsidizing and raising our prices and costs, ain't nobody going to buy the stuff because it's too expensive. You want to kill American export capability? Keep subsidizing.
I would just add, perhaps on a more specious note, that the title itself implies that the Trump administration would be opposed to selling U.S. product to Asia. Well, that's correct if by Asia you mean China, full stop. The Trump administration has entered into cooperative agreements with Japan and with South Korea and with Vietnam and many other Asian countries that, as Jack so adroitly put his finger on, are producing the magnets that we need in America. So, there's nothing inherently shocking that a Trump-backed company would sell product to Asia.
All right, we're going to go into our speed round, 30-second answers or less. We're going to start with you, please, Mel, on China issues temporary ban on helium exports.
Interesting move. It's prompted an examination of whether there's a helium energy shortage in America, particularly for green helium. Good debate, not essential at the moment.
Well, I was going to add here, strong because helium connects critical minerals, semiconductors, and the Iran war in a single story was the angle I was going to take in this week's Critical Minerals Report. Do you want to add anything to that, Jack?
Look, the U.S. is the largest producer of helium in the world. The main use of helium is in the semiconductor industry. Interestingly enough, we're trying to rebuild our semiconductor industry to at least take care of our own needs. So we've got the helium. The Chinese are now building a semiconductor industry, which they want to be independent of the rest of the world. They need all the helium they're going to produce for this industry. That's what's going on.
So, Jack, the next title headline, U.S. Defense Agency seeks up to $300 million of lithium. That's kind of an exciting headline. Should every lithium company speed dial the defense agency?
Well, I'd like to know exactly what lithium form they're looking for, because most of the companies we talk about are usually producing announcements rather than lithium. And if they want to buy lithium, we have one of the largest lithium companies in the world right in the United States. So I don't know what their idea is here. Is this for Project Vault?
That was the question I was going to pose too, whether it was for Project Vault, because everyone's sort of been anxiously waiting for the first contract demand to be issued. But you would think it would have been a little more specific. So it's the vagueness is what makes it questionable.
Speaking of vagueness, next headline title, Congo's planned mining law reform could dent investor confidence. Do you have any idea what they're talking about? I did not read that column.
No.
Yeah, actually, it's very interesting subject to debate because the Congolese Chamber of Mines is actually rather dismayed by the government's intention to more or less scrap the existing mining code and rewrite it in its entirety, which would, if it is done in that fashion, would give the government virtual control over the entire critical mineral sector, and not only a majority interest in new projects, but the complete authority to say who gets what. So the Chamber of Mines hosted this week a meeting in Congo to which the government officials were invited to meet with industry to try to discuss this and find a middle path for a partial reform of the mining code.
Well, why don't we just jump to Japan? Okay, there was a lot of news in Japan this last week, and of course, you wrote at least one column on Japan this week and the impact that China is having on the Japanese market. How about you give us some comments on that, please, Jack? Thank you.
You need to understand that Japan is moving, not trying, they're moving to be independent of China for critical mineral raw materials. Okay, Japan is obviously a major downstream producer of high-tech products. And that's what this is all about. They're still buying from China, and the Chinese are still happily selling them to make money. But Japan is investing very wisely in creating a Japanese-controlled system for providing all of their industrial critical minerals. They're doing a very good job. China can't stop them. And to be honest with you, you should ask yourself, why doesn't China cut Japan off completely? Why not?
Well, why don't we just ask Mel to answer that question? Mel, why doesn't China just cut Japan off? There's a quick question for you.
I think that China believes that if it does so, it will ignite a conflict that it is not yet ready to engage in.
Well, let's finish up here by a couple of questions that all have to do with money, 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 and money. Mel, China now has 7 of the world's 10 largest banks. It's a connection to the critical minerals on some level because we're talking about the power of the American wallet. How is this going to impact the international critical minerals race?
It won't unless China makes a deliberate decision to begin backing projects in third countries. Because, hey, everybody in Africa is looking for money. Everybody in Latin America is looking for money. So unless China decides to use that financial leverage, doesn't mean anything.
You know, China is the second largest economy in the world. So it's not, and it has state control of finance. So it's not surprising it has large banks. Okay. China's currency is not convertible. So if China finances something in the Congo, and then that company needs something from the world market that it has to pay in dollars, and that becomes a mess. Okay. China is having serious problems internally in economics also. As Mel said, they're not ready to become a world banking center. Not at all. This is one of the strengths of the West.
Part of the reason I mentioned to our audience that you had actually worked in Ottawa when you were working for the U.S. Foreign Service, Mel, is because we had a number of Canadian headlines this week, including the Financial Times did a piece called Canada Tells the UAE It Is Not Ready for Its $70 billion investment. That headline suggests poor decision-making process, perhaps, on the Canadians, or wise? Where would you like to go with that one?
I actually think it's probably very wise because coming back to what we were talking about earlier in terms of shifting dynamics and politics in the region of the Middle East as a consequence of the Iran war, we saw the split that erupted between the UAE and Saudi Arabia. And we saw the UAE depart from OPEC, which was shocking, although at the time it garnered little attention. Canada has to be very careful. It recently signed a major agreement with Saudi Arabia. So it's very wise for Ottawa to take a step back and decide, does it want to take money also from UAE, given that at the moment, the UAE and Saudi are at each other's throats?
Yeah, I couldn't agree more. I think Canada is showing extreme wisdom in being careful about this. Some of its competing countries on this continent are a little bit less wise.
And of course, our usual windup for Critical Minerals Report podcast is both of you get to ask each other a question and put each other on the spot. Jack, do you want to start by asking Mel your question of the week?
Okay, Mel, you know a lot more about diplomacy than I do, and I'm not very diplomatic. My question is, what we've been hearing about enormous foreign investment in the United States in this Trump administration. I mean, he's talked about trillions of dollars coming in. Can you tell us where that's going? I can't figure it out.
Well, Jack, the thing is, it's all in the magic of motion because those numbers are all coming from deals negotiated by Washington with a host of countries, ranging from Saudi Arabia to Japan, who, by signing, committed to invest hundreds of billions of dollars, which collectively will add up to $1 trillion or so. To date, they haven't yet defined the projects. So it's still a possibility that's hanging in the air. So my question to you, Jack, is if you are CEO of General Motors and you're looking at the complex world that is being created by all of these fast moving changes, how do you position GM to survive?
That's a very good question, and it's a very hot question in Detroit. Very simply, first, I don't know how it could survive. But if it's going to survive, it has to only make products that the market wants. All this nonsense about government interference, you will make EVs, you will not do this, you will do this. And in case you're not aware of it, everyone here in Detroit is talking about they're going to start making sedans again. Why is that? Because everyone wants an SUV, so they're going to make sedans. Okay, you understand that all they're doing is saying, "Hey, we're awake." So if you think we should make something different, we'll tell you we're going to make something different. But in fact, they are completely out of touch with the market, and they know it. They're frightened to death of Chinese cars at half the selling price of their cars. The average car in America is $50,000 now. The average income of a family of four is $84,000. Which do you want, food or a car? How long do you keep a car? They pray in Detroit to their gods that you will trade that car in every 3 years. That's their cycle. But we don't. We've gone from a 12-year cycle of cars to 15. It's 15 years at the average working life of a car. That doesn't bode well for increased manufacturing. I just want to say this. In my opinion, the idea that General Motors has a share price of $70, $80 and market cap in hundreds of billions is a fantasy.
Well, on that note, they obviously don't have Mel's telephone number because I think Mel buys a new car every year. For everybody interested in learning more about the Critical Minerals Institute, please go to our website and please note that both co-chairs, Jack Lifton and Melissa Sanderson, will be our guest on the upcoming masterclass called The American Trump Card. Thank you for joining us this week.